Hello, and welcome to the Exponential Growth Podcast, powered by Analyst Investors. I'm your host, David Olivencia, co-founder of Analyst Investors, and a passionate advocate for leveraging innovation and technology to drive success. Let's get started. This is Exponential Growth. I also want to give gratitude to Salvi Media. They're the founding sponsor of the podcast. They're a premier executive content agency dedicated to crafting exceptional content and strategies that elevate companies' brands and their executives. They're creators of the Emmy Award-winning CEO series. I think many of you have seen that. We've also featured one of my portfolio companies, Analyst Investors and Hallow, on their CEO series. And they've had in-depth interviews with CEOs talking about their personal journeys and business experience. The CEO series can be found on Cheddar, Entrepreneur Magazine, Reach TV, and really want to thank Salvi Media for their support of the podcast. You can also follow them on social media, as well as they have a podcast studio in Chicago. Join them as well. So again, thank you, Salvi Media, for making this podcast possible. Today, we have a very special guest with us doing some excellent things, not only at the University of Miami, which we'll talk more about, and had a really rough game with my Notre Dame Fighting Irish, but also what he's doing in the investing space and the Caribbean and just so many exciting things. It's an honor to have with us on the Exponential Growth Podcast, David Mullings. David, welcome.
Thank you for having me, David, and I love that we have the same namesake.
There we go. They call in Spanish they say it's tocayo, tocayo. Well, excellent. So, David, tell our listeners a little bit about David Mullings. Tell us about you and your journey.
No, I appreciate that. I'll keep it as short as possible so we can get to the questions and answers. But born and raised in Jamaica, but then spent half my life in Miami. I went to University of Miami undergrad and my MBA there. Played soccer, football, semi-professionally in Jamaica. So that really impacted the way I think about things in terms of how you have to train, you have to be a team player, the effort that it requires, right? Hard work isn't enough. You need to put in the effort, you have to have talent and work smart as well. I ended up working in finance. So my brother and I had a tech startup back in late 2001, launched February 2002. And that taught us a lot about starting a business, so coming up with an idea, pitching, raising money, scaling, but then ended up in the investment space. So worked with one of the largest firms in the Caribbean, focused on mortgages. So the largest mortgage provider actually is what we call a building society. So they're similar to credit unions up here. So I was on the product development team designing mortgages, investment products, and savings products, primarily targeted the Jamaicans abroad. Yeah, a lot of people know that we have a tremendous diaspora. So US, Canada, UK. Then I got recruited to work in low middle market private equity here in the Southeast USA, based in Orlando. And then from that, ended up working with a Black-owned hedge fund. So I kept seeing the investing world and decided that I wanted to create a vehicle that allowed retail investors to get exposure investing back home. And not long after, Jamaica, the best performing stock exchange in the whole world, according to Bloomberg, and they pointed out that there's no mutual fund, no ETF to give people access down there. So studied Warren Buffett since 2001, even though Richard Branson really my guy, I'll be honest. I can't
You're more Richard Branson than Warren Buffett. Okay.
I definitely lead. I was studying Richard Branson since I was 15. So that's 1996. Ended up being forced to study Warren Buffett in 2001 onwards because of the private equity side of the world and where things were going and investing. So I have both, but I definitely am more aligned with Richard Branson. You can't help, in my opinion, get away from the entrepreneurship side of things. Is exciting. Even when you're building a business, your own business, that's entrepreneurship. And
yeah,
the way he goes about it.
Yeah. So no, amazing story. And maybe just one double click area, because I think it's pretty cool. What was your startup? What was your startup on?
So it was called Random Media. We wanted to build a Caribbean MTV on the web. So the idea was let's build a website that allows people to come online and watch the music videos, see what was being done in the studios, and see clips from performances as reggae and dancehall was blowing up. So this is Sean Paul and Beanie Man, and then soca music, Machel Montano. And this is February 1st, 2002, we launched it. YouTube didn't launch until 2005. So
wow, that's right.
Early with video on the web, yeah.
Cool. And then all kinds of lessons there as you kind of built up.
Oh,
Okay. So
tons.
so you've had some Exponential Growth podcast, right? We believe that we are living in times of exponential growth, a lot of it being fueled by technology. What
Mhm.
in terms of what you see, what technologies are exciting you? What are areas that you're seeing for exponential growth, David?
So I love that. I would say two of the key things we have been focused on. Obviously, everybody's talking about AI. So we have started to find ways to integrate AI into the business so that we can scale quicker. A lot of people, when they start a company, realize, wow, I can't just spend money hiring a whole ton of people. So we need to focus on efficiency. How can we be more productive? So using AI, whether it's to help us think through our marketing strategy and what we're going to post and how often, right? We can't afford the biggest marketing team. How can we go and do certain things on social media, for example, or using AI to help us with answering the phone, responding to people, creating talking points for our staff so we can quickly integrate a salesperson. So that for me is massive. And if you're not testing it already, you're in trouble because your competitors are already tested. They're already in trouble,
Exactly. Yeah,
right? So that's
exactly.
one. And the other one for me that we really see as something for exponential growth is actually leveraging social media for business. I think those of us who were born, right? I'm born in the 80s, so those of us in the 60s, 70s, 80s originally looked at social media almost as a waste of time or just a way to stay in touch with friends and family. I can see how old are their kids, have they graduated, just life events. And there's a generation that gets their news from there. They talk about investing via social media. They learn so much there. So now I realize it's a platform and you get to use it as a tool. You can choose how to use it. And I shouldn't be forcing everybody to interact with us in the way we want them to interact with us. We need to go where they are. So we've had to leverage social media for exponential growth.
Yeah, no, it's amazing. It's amazing because I always tell people it's like you can get your message out instantly and globally, right? And you do, and you add value, right? You give those people out on social media value of a message, and they're going to resonate and follow you. And it makes life fun too, right? I mean, it's
It
there's
does.
a lot of junk out there. There's a lot of junk out there, but if you do that, it bodes it creates more success, right, for you.
Yes,
So.
it does. It does.
So okay, so you Richard Branson, Warren Buffett, I kind of hinted a little bit about Caribbean and what you got going on there. Tell us a little bit more because I think it's fascinating what you're doing and building and in full disclosure, I'm an investor
All right.
in what you're doing together. So kind of share with our listeners what the cool things you have going on uh, in your company.
No, I love that. So with Blue Mahoe Capital, the focus initially was on solving one problem. There are Caribbean Americans who wanted to invest back home, right? They want to invest back home, but there's no vehicle that's audited, transparent, and ultimately is not liquid, right? You want something that's regulated, audited, transparent, and then liquid. So no mutual fund, no exchange traded fund. So even though Jamaica had the best performing stock exchange in the whole world for 5 years, with Vietnam as number two and the US as number three, they couldn't just easily go and buy that. They could buy an ETF for Vietnam, they could buy an ETF for Kazakhstan. And so we wanted to create that vehicle that would allow anyone to invest down there. And so the Jobs Act allows us to do that, regulation crowdfunding, regulation A. So we wanted to create an investment holding company. Nobody can create an ETF or a mutual fund. If we did a VC fund or a hedge fund or a PE fund, that's only for accredited investors. And I needed the 99% to invest. So that's what we spent the last 6 years working on, going through the SEC process, got a qualified offering, and started going last year. We reserved our ticker symbol. We announced that as IRIE for the NASDAQ. So we're really excited to execute the
And
next
for our listeners, what is because I just learned what
IRIE.
IRE what does IRE mean for
so,
our
so,
listeners who may
so
not know what it means?
when somebody in Jamaica says everything IRIE everything is okay, everything is all good, everything is great, right? That's really what it means. So IRIE, IRIE, made famous obviously by Rastafarians, people like Bob Marley. We hear that stuff. So it's a very common term in Jamaica. And we're really excited. We're not just investing in Jamaica, though. Yeah, we think of it as investing in primarily four Caribbean tigers. So Bahamas, Barbados, Guyana, and Jamaica. Similar to the four Asian tigers that we had 40, 45 years ago, the Singapores, the Hong Kongs, and so on. It's the same thing, right? The Caribbean is no different from India 25 years ago. It's the same exact problems that we have down there. We're just a little bit behind. We think that is a huge opportunity and overlooked market. It's a front yard of the United States. It's well known. It's not just about tourism. We have a growing middle class in a lot of these countries, improving GDP growth, better debt situation. Debt to GDP is going down in a lot of these countries. So it's freeing up space
Wow.
to invest in infrastructure. They need housing. They're doing roads and bridges. They need financial services, consumer packaged goods are growing. So we're really excited about that. And of course, telecommunications and IT, right? Data is going to be even crazier. They get the leapfrog in a lot of ways. So it's growing. We want to invest where there is growth. And yeah, Europe, for example, is fairly stagnant. The US has had stagnant economic growth for a while as well. So we present something different. But ultimately, the people who want to invest back home can't. And we provide a very simple way for them to do that. And then we want to list that on the NASDAQ. And then we can go from the public companies and the private companies to eventually help them with some of the earlier stage companies, right? We are not an early stage investor. We want to focus on profitable existing businesses, domiciled in strong long-term growth industries run by capable management. That's really where we want to start. Then we can branch out and help the smaller and medium-sized companies.
Got it. Well, so there's a lot there, lot to unplug. Yeah, and we have, I'd say, a diverse set of audience, right? We have some people who are just kind of learning about stuff, and then we have some people that are, sophisticated in investments, technology, and private equity. So this is there's I guess there's two ways you can at least two ways you can enter the NASDAQ, right? You can do a direct listing or you can do an IPO. I believe there might be others, but I think those are the
You
main.
could do a reverse merger into
Oh
a
yeah, yeah, yeah.
company as well, but for the most part,
Or like SPAC, maybe SPAC is
yeah,
another
I
way
mean,
you can.
technically, a SPAC is a reverse merger into a
Yeah,
SPAC as well. So yeah, those
yeah.
really are the three ways that you can get listed.
And so in the IPO, you see them, they jump and they pop the bottle and do the big IPO, and it's very expensive. It's like extremely expensive, right? Direct is a little bit less expensive, a
But a
less
lot
more
cheaper.
flair.
Yeah,
A little
it's not
cheaper.
even a little bit. It's a lot cheaper. Like it's one third the cost. It's a lot cheaper. Yeah.
So you're going the direct route, and then what you mentioned, it's the ticker will be IRIE.
Yeah.
So anybody who can buy public stocks, I guess, would be able to buy this one.
Yeah. Once we're
There's
listed, before
yeah.
that, anybody can still buy.
Oh,
So we did a Reg CF last year, and anybody who's a US person could buy $10 a share, 500 minimum, and it has to go through a regulated platform, so an SEC regulated platform. So we're going to file a Reg A plus paperwork. So we're launching what's called a test in the waters. People will be able to pledge $10 a share, $100 minimum to purchase, so 10 shares minimum. And then we will then list on the NASDAQ. So this is the last step and the last chance to buy shares while we're private. Then we will list on the NASDAQ, if and when qualified. So we're focused on the qualification part now. We're excited about this phase.
oh no, it's great. It's been a wonderful journey, and I'm glad to be a part of it. And
We
and then where
appreciate
where would if people are interested in finding out more on that, where would they go, David?
So there's two places, bluemahoecapital.com, MAHOE, is Jamaica's national tree, or you can go to www.islandforward.com because we're moving the island forward.
There we go. Excellent.
Yeah.
Okay, so that's excellent. I'm very excited about that. And then now let's talk about investing in your investment philosophy in this world of all this exponential growth and change. You mentioned, Warren Buffett, you mentioned your style. What recommendations would, and like I said, we have inexperienced to very experienced, but your philosophy on investing, David.
Yeah, so for me, obviously, how you invest is going to be very personal and based on your goals, your time of life, what's happening in your own life. But in general, the first thing is that you have to invest if you want to create wealth, right? A lot of people think that they have to be wealthy to begin investing, when it's really that you need to begin investing in order to be wealthy. I think we need to make sure you understand that. So you have to invest, even if it's just $100 or $50 per month to start. You need to invest in something, right? Even if it's just buying an S&P 500 fund and start it. The second thing that I tell people is that they need to focus on, either if you don't have the time to become really good at something, then you should let an expert do it instead, right? So buying Berkshire Hathaway stock or buying an S&P 500 fund or an ETF nothing is wrong with that. You don't have to become an expert at investing. You need to understand the basics, but you don't have to become an expert. It's the same way that I go to somebody else to prepare my taxes. I pay an accountant to go and do our finances. I pay a lawyer to deal with the legal stuff. The same way that you're professional investment managers. So I don't go and try to, right? I'll brush my teeth. I can do that. I don't try and do what the dentist does. So there's a difference. So to me, investing is like actually brushing your teeth, right? It's best if done regularly. But also, professional goes and does the professional cleaning every now and then. So put the money to work and read a few books. It's really not that hard to just read some books or watch some videos. I know that we can do that. Or use AI to summarize the books to understand the basics of investing. What is a stock? What is a bond? What is a dividend? Just understand the difference and go from there.
And any books kind of your top two investing books?
So definitely when we think about the books, I'm a big proponent of this one book called The Warren Buffett Way. I think is an excellent book. And another book that I think everybody should read, even if they don't plan to invest, is The Psychology of Money. I think that book is extremely important to get you to think about money in a healthy way. Now, all of us have different ways of thinking about money depending on how we were raised, where we were raised. And sometimes it can actually prevent us from investing. We become so risk averse. We think that it's better to put money in the bank than to actually go and invest. Some of us think we should only invest in real estate and that we'll never buy shares in a company, or that we should never invest in early stage companies. So the psychology of money is number one, and Warren Buffett Way is number two. Those two books I would say are the first two to read.
Oh, those are good ones. And actually, I think I've read the Warren Buffett Way. I've read a couple of different books, but I haven't read. I wanted to read the Psychology of Money, but
Oh man,
haven't read the one. I got to get on that.
yeah, it's really, I give it to everybody now when they come and ask me for, oh, what's the first book should I read? I want to invest here. Just this is the book. It makes you question a lot, and you realize some of your own beliefs that, oh, I wonder where that one came from. Oh, okay. Let me change that thinking, right? It's the same way that a lot of people would love to have invested in Facebook before it went public, but most people would never do that, even if they were presented the opportunity, because they don't understand the risk and they don't understand what they're signing. And so, oh, this is too risky. Versus after it happens, like, oh man, that's great. But you didn't know that's what Facebook would have done, right? Hindsight is 2020. You needed to have invested in 15 companies and hope that one would have been Facebook on the early stage side, which you know from an angel investor.
Exactly. As you're speaking to the choir there. You're speaking to the choir. Yeah, no. Well, excellent. So we'll get on that. And then the last part of the exponential growth we like to talk about is leadership, right? So, we're in times of all this change, right? AI is hitting hard, a lot of different technologies coming, social media, digital. What are some leadership principles that you think stand the test of the time, or how do you best lead in these times of exponential growth?
I love that. So I think it's very important for us to recognize our strengths, our weaknesses, and our blind spots, right? As leaders, people expect us to actually know all the answers, and we need to be very upfront and say, actually, I don't know the answer to that. If you know the answer, or you know this topic, this area better than me, teach me. Be open, right? Leaders, in my opinion, are willing to learn. Get somebody who's a subject matter expert. So if you don't know AI and haven't been experimenting, find somebody else who knows more about it than you and let them train you and then train the team. So now you can show people, hey, I'm willing to learn. Leaders are not know-it-alls. They're know enough and know when to allow somebody else to come in and lead that part. So I think that's extremely important from the leadership standpoint. It cannot be I alone can fix it. But it does need to be I can lead this though, and this is a team that I'm building. So I think that's really important. Knowing your strengths, weaknesses, and then understanding blind spots and being willing to learn. That's important. Another thing too is I think that we've shifted to this leadership model that is more empathetic towards the people who work with us. It used to be do as I say. That really was, hey, we agreed on this, just do this, and that's it. Versus, hey, you know what? COVID really taught us. I don't need to stare at a computer every day and see in an office and you have to be in there for 40 hours. I am paying you for this outcome by this time. You can get it done in whatever way works best for you. So if you work best from 6 p.m. to 1 a.m., it's not my business. I really don't care. Here are the calls I need you on, but go and do what you need to do. and you work in the best way for you. If you work best at 5 a.m., please don't call me or message me at 5 a.m., but you do what you need to do. I think we have to learn to be more flexible, as I think this is the first time we've had 4 generations in the workforce at the same time. We have boomers, we have Gen X, we have Gen Y, and now we have Gen Z coming into the workforce. And all of us work differently. All of us have different language. All of us have different expectations. So I think it's the most challenging time for leaders as we build teams and try and get them all to work together.
Yeah, no, I love it's like that flexibility thing. You know,
Yeah.
you're paid for an outcome, right? And I always say, like, I don't care where you do it, kind of like when you even do it, but we have an outcome, and I'm going to lead you there, and I'm going to give you the right incentives where, you know, hey, I love coming to work. I know that if I do this, this is going to be so great for me. I'm learning every day, and so you know, so that, anyways, I that totally and I think I don't, you know, you see these companies that are like mandating this go back to work. I think it's going to be tough to hang on to great talent. I think it's going to be tough, but we'll see.
There are some jobs that I get it. You want people to be in the same place, bouncing ideas off each other. I get that. There's a time and place for that. I don't know if every single day is required. So yes, I might mandate two days in the office to really feed off each other. But otherwise, man, you need to do what's best for you and get away from the strict 40-hour work week that was designed for a factory where we're just
Yeah,
doing
our
this.
farms are
Or farms,
factory and farms.
exactly.
Yeah.
Yeah, this is a completely different economy now.
Yeah, totally. Well, so I know you mentioned, you know, the Blue Mahoe and all that for the investing side. How would those listeners stay connected to you? What social platforms are you on? How do they follow you and stay connected to you?
Easiest way is www.davidmullings.com, Mullings, right? So the British spelling. And then all my socials are on there. So whether it's Facebook or Instagram, LinkedIn, Twitter, I am most active on Instagram, and then LinkedIn would be number 2. So those are actually the best places to find me. I do respond to direct messages. I love spending 15 minutes just talking with someone who has a question or a few questions about investing or starting their own business, or they just want to bug some ideas off me. I love giving feedback. I've made enough mistakes. I would rather somebody learn from my mistakes and repeat them.
Oh, excellent. Well, I know you got a lot going on. You know, you're getting ready to launch this next round of funding for IRIE and then beyond. You know, and we didn't really mention this, but you know, you're on the board for the chair for the Miami, right?
Yes, I'm the president-elect for the University of Miami Alumni Association, and that I feel like I work at University of Miami actually. I love it though. I love it. This school has been, you know, a great school. My dad did his master's there. My brother did undergrad and grad school. I did undergrad and grad school. So University, and they provided scholarships to me. So University of Miami helped to change the trajectory of my life, and I love giving back to the next generation of students.
It's a great university, and I think there's more. It's just in such a strategic spot, and you know, with your leadership and the strong alumni, I continue to see it going in great spots. So, David Mullings, thanks again for jumping on the podcast. Look forward to staying in touch and celebrating with you as you reach these milestones with IRIE.
Look forward to it as well, and thank you for everything you do, David. Really appreciate it.
All right, thank you.